Hello, this is Bode Oshosami, and welcome to another episode of Global Business Insights, where we look at the main business headlines, bringing you some additional analysis. Nigeria's October inflation rate was 33.88%, up from the September rate of 32.7%. Month-on-month, October inflation was 2.64%, which was also higher than 2.52% recorded in September. Chinese e-commerce giant Alibaba posted a 58% jump in Q3 profits. Alibaba cited an acceleration in growth in its cloud business unit as net income came in at 43.9 billion Chinese yuan, that's about $6.07 billion. The European Commission today further downgraded forecasts for Eurozone growth to 1.3% next year as Germany's economic problems weigh on the region. The downgrade highlights mounting gloom and comes ahead of a decision to hold a federal election in Germany. That's on Sunday, February the 23rd, 2025, following the collapse of Chancellor Olaf Scholz's troubled three-party coalition. The UK economy grew 0.1% quarter-on-quarter in the 3 months to September 2024, less than market forecast of 0.2%, and after expanding 0.5% in the second quarter. Chancellor Reeves said she was not pleased with the data. Year-on-year, the UK GDP data came up at 1%. That's year-on-year in Q3, ahead of 0.7% growth recorded in Q2. The monthly UK GDP arrived at minus 0.1% in September, compared to a 0.2% increase in August. Markets are also digesting recent comments by the Bank of England Governor Andrew Bailey for the UK to strengthen its ties with the EU to help its economy. At a press conference today, the China National Bureau of Statistics expressed its outlook on the economy, confirming that consumer expectations improved in October, adding that expected policy adjustments will expand domestic demand and consolidate the trend in economic recovery. The Bureau is increasingly confident of achieving 2024 economic growth target, and there are initial signs that the property sector is somewhat stabilizing. Earlier, we saw China's October retail sales increased 4.8% year-on-year versus 3.8% expected and 3.2% in September. Also, as industrial production was up 5.3% year-on-year in the same period, slightly less than expected. Japan's Q3 GDP expanded 0.3% year-on-year after 2 straight quarters of year-on-year decline. It had seen a revised 1.1% decline in Q2. In the US yesterday, the Bureau of Labor Statistics reported a 2.4% increase in the headline producer price index, that's PPI, or wholesale inflation. That was in October, higher than expectations for a 2.3% gain and up from September's 1.9% annual increase. Excluding food and energy, the PPI gained by 3.1% year-on-year versus 3.0% expected. Monthly headline PPI was also up by 0.2% versus a month earlier, matching initial expectations. And just in October, US retail sales, a key predictor of consumer sentiment, just came in month on month at 0.4%, which is higher than was expected, but lower than a dramatically revised 0.8% in September. The previous read for September was 0.4%. Still, in the US, tariffs and lower taxes are coming, and Jerome Powell may have doused the steam on the Trump trade as Bitcoin and most indexes fell after comments that the Fed didn't need to be in a hurry to cut rates. These comments were made at the Dallas Regional Chambers yesterday. Analysts expect the South African Reserve Bank to cut its repo rate next week as slowing inflation continues to make way for a series of cuts through the middle of the next year. There is also some urgency to get higher growth in the tepid economic environment. Nigeria's inflation rate went up for the second straight month in October 2024, hitting a 4-month high of 33.9%. Nigeria's headline inflation went up to 32.7%. That was in September 2024 from 32.2% in the prior month. The jump in today's read was driven primarily by escalating food prices, soaring energy costs, and lingering volatility in foreign exchange markets. Food inflation quickened further to 39.2% from 37.8% in September amid reduced harvests caused by severe flooding and ongoing crisis in key agricultural regions. But core inflation, which excludes the prices of volatile agricultural products and energy, also rose to an all-time high of 28.4% in October, up from 27.4% in the previous month. On a monthly basis, consumer prices climbed up by 2.6% after a 2.5% rise in the previous month. The central bank had said that it has no choice but to continue its restrictive stance until price pressures abate, even as lower demand and tighter money supply will eventually pull down prices, hopefully. Inflation in Nigeria has for a while been a theme requiring coping strategies for Nigerian businesses. According to Verraki, Business Solutions and Consultants, companies are renegotiating business contracts, reducing discretionary and non-strategic spending, reducing waste and consumption, while others have found ways to change their pricing model and product packaging or to reduce costs, even considering product quality adjustments and reviewing their product lines, at the same time closely engaging employees facing fresh cost of living pressures. According to the October Stanbic IBTC Nigeria PMI report, price pressures contributed to a reduction in purchasing activity, with firms scaling back their input buying, also in response to falling client demand. Weak demand for inputs and competition among suppliers meant that lead times on the delivery of inputs continued to shorten. Analysts commented that although in July 2024 headline inflation declined after 10 consecutive months of increases, the decline appeared short-lived as inflation rebounded, driven by an increase in PMS prices and the depreciation of the naira. The upward trend is expected to persist over the next 3 months, albeit inflation growth is projected to slow. The expectation is to see inflation tick up to 34% by November. The latest CBN inflation expectation survey, however, says that over the next 6 months, business and household respondents expect that the level of inflation will see some easing. Abayomi Olarinmoye is a partner with Verraki, a technology and business solutions firm focused on addressing African challenges in business and government. She comments on addressing challenges of scaling up a business in the Nigerian inflationary environment.
I'd like to offer some tips, suggestions about how a business can scale up against a backdrop of galloping inflation, because scalability really is the name of the game. There are too many businesses that find it difficult to up their game and transform, make a step change in scale, in size, even when they have been running such businesses for quite a while. Yes, we know the environment is challenging, but really, how do you scale your business against a backdrop of galloping inflation? Well, one of the ways I would like to suggest you can do this is to do some value reengineering, improve your cash flow management, deploy your capital strictly where it will help you to get an improvement in growth. Not just where it's needed, but where it will deliver the most growth for you. Deploy your cash flow in that area. Offer your customers incentives to pay you early. Embrace technology. Technology can help you to reach more customers in a shorter time. So embrace technology to be more productive, to improve your productivity, and to strip some costs out of your operations. Improve your customer experience, definitely. What you're offering your customer, that experience needs to be improved significantly. Source more inputs that you can locally. Manage your treasury in an innovative manner so you have funds. Diversify how you manage the funds you have at hand. Negotiate for longer term contracts. In fact, similar businesses or businesses that use similar inputs can come together to negotiate bulk purchases that will bring down the cost for both of them. Who says you can't share containers? Who says you cannot negotiate to buy that input at a better price and split it when it arrives at your warehouse? Yes, inflation is now at 33.8%, we hear, from about 32.7% last month. Businesses need to get more savvy in how they push out more volumes, how they increase the scale of their operations while managing to keep their head above water. And I think the more we continue to look at the value chain of the business to see where we can strip out costs, what more we can replace locally, I think this will go a long way to help us, not just in keeping our heads above water, but to scale up the business.
In the US, the announcement that Robert F. Kennedy Jr., seen by many as a vaccine skeptic, as head of the US Department of Health, has already sparked a sell-off of pharmaceutical and biotech stocks, with several US-listed vaccine makers, including Moderna and BioNTech, closing down yesterday. Others are saying Trump loyalists are filling the cabinet, and that can't be good. Trump is expected to hurriedly roll out a revolutionary change agenda and has only 2 years before midterm elections could change the power structure in Congress. One can argue that he has little time to orientate or realign cabinet nominees on what he wants to do, and is obviously using people already strongly aligned with his plans. My sense is that not prioritizing competence will definitely hurt progress, and the incoming president may have no choice but to replace some of the initial set of cabinet members, assuming a doting Republican majority in Congress acquiesce to all the nominations, some obviously controversial. Citigroup analysts also warned that emerging market stocks will underperform compared to global peers following Donald Trump's recent victory in the elections. This is in spite of China's recent policy initiatives to help growth. US dollar strength could also put pressure on emerging market assets, adding that Saudi Arabia and India will tend to be less exposed to the rising trade-related risks. The smarter strategy is to mirror what the US Fed seems to be doing, which is to ignore most of the political noise and pay very close attention to the data and be prepared to move quickly. Also more cautious with long positions. Asia markets were mixed as investors assessed fresh data from China and Japan. European stocks were mostly lower in a choppy session as investors digest fresh economic data and hawkish comments from the US Federal Reserve Chair Jerome Powell, which has led to a somewhat subdued Wall Street. Well, that's all we have on this episode of Global Business Insights. This is Bode Oshosami. Thanks for sharing on Facebook, LinkedIn, X, and YouTube. And again, thank you so very much for watching. Enjoy your weekend. Bye-bye.